Congratulations. Take a deep, calming breath. You did it. Your offer for the house was accepted. This is a huge, wonderful moment. Let that good feeling sink in. It's the result of a lot of hard work. I'll walk you through what comes next step by step. We'll move at a slow, comfortable pace. Each step brings you closer to that front door, keys in hand. Now you're entering a new phase, under contract or in escrow. That's the period between offer acceptance and becoming the owner. It usually lasts about 30 to 45 days. During this time, you, your lender, and other pros will work together. It's a process of checking and double checking to protect you. We'll break those checks into easy, manageable steps. You have a team ready to help. Ask questions anytime. Let's get started. The very first action you'll take is to submit your earnest money deposit. Think of this as a good faith payment. It shows the seller that you are serious and fully committed to buying their home. The specific amount was decided during your offer negotiation and is written right into your purchase contract. This isn't an extra fee. It's more like a down payment on your down payment. The money is held safely by a neutral third party like a title company or an escrow office. Later on, at closing, this money will be credited back to you and applied toward your closing costs or your main down payment. Next up is one of the most important steps for your peace of mind, the home inspection. You will hire a professional home inspector to do a thorough checkup on the property. This is your chance to learn everything you can about the home's condition from top to bottom. The inspector will carefully examine the roof, the foundation, the plumbing, the electrical systems, the heating and air conditioning, and all the major appliances. They are looking for any existing problems or things that might become problems in the future. After the inspection is complete, you will receive a detailed written report. Take your time to read this report carefully with your real estate agent. It's normal for a report to list some minor issues, as no home is absolutely perfect. If the report uncovers significant problems, you have a few options. You can ask the seller to make the necessary repairs before you close. You could also ask for a credit, which is money back from the seller to cover the cost of repairs. In some cases, if the issues are too big, your contract may allow you to walk away from the deal. Your agent will help you decide the best path forward. Remember, the inspection is there to protect you. It gives you a clear picture of what you are buying and prevents you from facing any major, unexpected surprises after you move in. It empowers you to make a final, informed decision with confidence. Once you are satisfied with the inspection results and have reached an agreement with the seller on any repairs, you can move on to the next phase. Now, your mortgage lender steps into the spotlight. The lender will order a home appraisal. An appraisal is a professional opinion of the home's value. It's required because the lender needs to confirm the property is worth what they're lending. A licensed appraiser will visit the home, measure it, and assess its condition. They compare it to similar homes recently sold in the neighborhood. That comparison determines the home's fair market value. You will get a copy of the appraisal report when it's finished. The appraisal is a key checkpoint for your loan. Ideally, the home will appraise for at least the price you agreed to pay. If it does, everything moves forward smoothly. Sometimes a home appraises for less than the purchase price. This is called an appraisal gap. If this happens, don't panic. You have options. Often you can renegotiate the price with the seller. You might also bring a little more money to closing to cover the difference. Your agent and loan officer will guide you to the best solution. While the appraisal is happening, your loan moves into underwriting. Underwriting is when the lender verifies all of your financial information for final approval. An underwriter will review your income, your employment history, your assets, and your credit report in detail. They're double checking you meet the loan program's guidelines. Their job is to ensure the loan is safe and responsible for you and the lender. During underwriting, the underwriter might request additional documents. They may ask for a recent pay stub, an extra bank statement, or a letter explaining a recent deposit. This is very common. Don't be alarmed. Respond quickly and completely when asked. Sending documents right away keeps your loan on schedule. It's also crucial to keep your finances stable right now. Avoid large purchases, opening new credit cards, or changing jobs until after you close on your home. Section 4, nearing the finish line, the clear to close. After the underwriter has reviewed all of your information, checked the appraisal, and verified every last detail, you will hopefully receive the 3 best words in the entire home buying process: clear to close. This is the official green light from your lender. It means your loan is fully approved. The lender is ready to fund your purchase. This is a moment for another small celebration and a big sigh of relief. Once you are clear to close, the lender and the title company will coordinate to schedule your official closing day. You will also receive a very important document called the closing disclosure. This document outlines final loan details, including the interest rate, monthly payment, and a complete breakdown of all the closing costs. These are the fees you'll pay to finalize the purchase, and they include things like appraisal fees, title insurance, and loan origination fees. The law requires that you receive your closing disclosure at least 3 business days before your scheduled closing date. This gives you time to review it carefully without feeling rushed. You should compare the numbers on the closing disclosure to the loan estimate you received when you first applied for your mortgage. The figures should be very similar. If you see any differences or if you have any questions at all, you should immediately contact your loan officer. They can walk you through the document line by line, explain every charge so that you feel completely comfortable. This 3-day review period is a crucial consumer protection. Take this time seriously. Make sure everything looks exactly as you expected. The day you've been waiting for has finally arrived, and the closing day. This is the formal meeting where ownership is officially transferred from the seller to you. It usually takes place at a title company office or at an attorney's office. You will be sitting at a table with a large stack of documents in front of you. It can look a little intimidating, but the closing agent will guide you and explain each document before you sign. You will be signing papers that finalize your mortgage and transfer the property title into your name. Bring a few important items to closing. Have a government-issued photo ID like your driver's license. Bring the funds for your down payment and for closing costs. Funds are typically provided as a cashier's check or a wire transfer. Personal checks usually aren't accepted. Your closing agent will give the exact amount and instructions a few days beforehand. Follow their directions carefully and everything will go smoothly. The signing usually takes about an hour. After the papers are signed by you and by the seller, the closing agent works with your lender. The lender sends the loan funds to the title company. The title company pays the seller and any other owed parties. The transaction is complete. After funds are exchanged and paperwork is finished, you officially become a homeowner.